Good afternoon. I'm Dan Hussey with Zaner Ag Hedge, here to bring you a rundown of market price action and notable events for U.S. agricultural markets on March 28th, 2025. Got a big news week next week, with Monday being the USDA's announcement for quarterly grain stocks, as well as our first acreage guidance update. Well, since the Outlook Forum, of course. We'll see what the USDA has to say, and we'll be trying to dive into what price action, might recover or not from there. Grain stocks are expected here, and range estimates coming from Carrington Brown over at Reuters. Corn, March 1st, average guesses 8.1 billion bushels, soy 1.9 billion, with wheat at 1.215. Considerably smaller quarterly grain stocks from our December 2024, a little bit lighter on the wheat and the corn there compared to last year. Well, a little heavier there on our soy grain stocks, which, all things considered and what export markets have been doing, okay, we're not that far off. It's, what prices where we're at in terms of these markets this time last year, right? Kind of interesting, thought there. So here's our planted acreage estimates. My apologies. 94 million acres, 94.36 million trade guess there on corn, soy 83.76, with wheat 46.47 in terms of the trade guesses there, taken from Reuters and compiled by Karen Braun. Thanks so much, Karen, for all the work you do there. See, compared to last year, we've lost 4 million acres of soy, put it over into that corn. And generally speaking, anything smaller than these numbers, given the quarterly grain stocks compared to last year, you'd think, we'd be pretty bullish and friendlier here on our row crops if we get smaller acreage numbers than what is anticipated here. Okay, so let's dive right into it. Let's just talk about where things are the worst right now. Wheat was a little underwhelming there in terms of our weekly close in the week in the wheat, way off of that 18-day moving average. That's up there at 552 for the May Chicago wheat, closing at 526 here, or looking like it's going to close down around 526. Again, we got a few more minutes of price action here today, but I needed to get going, and it's my son's birthday, so we'll be taking him out for dinner, but I needed to get going here earlier today, so needed to get this done during live market price action. But what a cool thing we get to talk about. So these aren't going to be the closing values, right, that you'll probably see in print, but hey, we'll talk about where the market's headed into the close today, and in theory, where it closes, how we can then better judge for the weekend and what's to come with Monday's news. So down 5.75 cents here, 562 last on the corn, lows down around 517. We're almost 10 cents off the low of the day. This is looking like a nice little reversal here for the May corn contract low for May corn as well. Kind of or May wheat, excuse me, I keep saying corn, May Chicago wheat. KC hard red winter, not quite a new low there. But while we did make a new low for the spring wheat, so KC, the May wheat, though, down 16 cents. I mean, really trying to get there. And I think it's just playing a little catch up here. A little interesting, side note, that KC Chicago wheat spread, KC wheat, trimmed up to 24 cents there over. I think this is probably a value proposition down here, down that 20 cent over area, for it to go back to 50 cents or 45 here back at its highs. But just something to think about there. And if KC wheat gets beaten up a little bit too much, there's probably going to be a bid here sooner than later once you see that final capitulation, maybe reversal. So wheat, want to see it, trade a little bit higher, get a little bit of a better bid. I'm not going to go out there and call it a low just yet, but boy, lows tend to form and, off of oversold conditions like this into the end of a month. Could be an interesting development there. Let's talk corn, though. Let's talk about where markets are starting to look a little bit better. Before we talk about some of the better performers, in other areas like soybeans, for example. Corn coming down. It wasn't a new contract low, right? But certainly a new low for the month of March here into the end of the month. Not even a new oversold condition, but we did kind of reverse the day with this outside day now higher so far, which, we could clamber back above that 200-day moving average comes in. We're basically testing into it here at 454 again. this downwards or upward sloping trend line that's been holding since basically September contract lows. We're back above those thresholds. The next real resistance on this chart is that 460 to 470 area where we have that cluster of 118-day moving average above. And then above there, it opens up to 480 and back above $5 again. We can start talking about corn back above $5 if we can get back above that 18-day and really reverse this downtrend that we've had. And it looks decent to maybe try to do that. And I mean, at the very least, we should talk about the 440, to 480 range now that, May corn has found itself into. That's a valid discussion. December corn getting, basically making a new low for the month as well and snapping right back up into its range. Not, going and turning it outside or even positive just yet. And certainly back inside that old trading range. But, you find support somewhere. It just needs to get back above and break resistance, which I see, that 450 area is a major resistance zone with that cluster of moving averages up there around the 200, 118 day that you see there. But needless to say, really need to see a little bit more life in corn to feel more comfortable, with it turning or maybe even turning up at this time, right? A good close for the day and turning, otherwise, really what has been a negative week kind of around. And, that I think holds truest in the soybeans. We'll take a look at those in just a minute. But let's flip over to the shorter time frame chart here for corn. Let's look at that 4 hour because, an outside day higher, you kind of want to see, participation and the time of the day that it began, right? We were starting the overnight session, we were lower, traded a little volume on the open, made a new low, and then for the whole day session have now rallied back. And this makes for a really good reversal, kind of candle and taking out yesterday's high. Now you've got, the footing and a potential recovery type technical setup happening. The short covering is now on, right? We've built up probably not necessarily into a short position in corn because corn's been so net long in that trading category. And that the CFTC delivers for commitment to traders. But we are right. You do have a kind of a rejection signal for this double bottom into the 440 area now, a reversal signal because of this daily candle development. You've got upward, you get potential resistance that, could be 470 to 480 area and a range that could trade all the way back, to start off a new month. It's just an interesting development, that technical development, that if we were looking for a reason to maybe get a little more excited about corn or start talking about maybe the reversal, well, this is, how things start, right? One step, one foot in front of the other. So cautiously optimistic there that corn, could be turning the tide here, had made a double bottom. I don't know if we're in the environment just yet before this quarterly grain stocks and acreage number to say, oh, well, corn's going to just knife below that 440 area and be back, testing below $4 here soon. I happen to, be maybe a little bit more in the camp that if this is the most damage we can do to the chart, I think we're going to get through the biggest acreage number we see for the year and potentially the biggest grain stocks number we see, right for the rest of the year here coming out in just a couple of days. And so once that news drops and the market's digested it, what does that leave us, really doing and focusing on into the planting season, right? And where weather events can certainly drum up a little bit of some green shoots, if you will. So kind of expecting maybe, a bounce back here because of the technical drawdown we've seen on the market. We've definitely seen a rather large futures position be tailored back now. And, basically the funds aren't really getting much they're not tightening up that position below 100 grand right now, right? Like they basically are at 100,000 in the fund category long. And I think that we're probably going to live around that amount for some time here. I think the funds are genuinely rather comfortable being long, 100,000 corn. And now I think they start to build into, a bigger position as ultimately how it'll play out. Right. They trimmed up that position and now allow for themselves to build back into it as the market rallies. Well, we'll see. So some interesting data points here. The Commodity Classic, actually from Karen Braun as well, of how many years right in the past that we get to this large position and it doesn't just keep going. Well, it's very, very anticlimactic, but it does happen. All right. So let's start. I guess let's move right into the bean complex. May beans looking good after today's close, right? We kind of found exhaustion. You got this, definitely still a triangle, maybe even a bear flag, you could call it, but like consolidation, right? The market couldn't keep going lower for whatever reason. It also hasn't been able to really go and catch a footing and go higher, but like, okay, it tightened up. We got in a really narrow range. Compression below this downward sloping trend line and 18-day moving average finally gave way. Yesterday was the first day we closed back above that 18-day moving average since like February, the start of February. So it's been like 2 months. And now the market, I think, really got too short and oversold. And then, you can see here even on the day's stochastics, if you can't break below these levels when you're down at lower prices and the market starts to unwind, like now you're in a short covering rally. 100-day moving average is going to be, some resistance here at 1027, 55 and 50-day up around that 1040 area with the 200-day at 1049. It's a long way up and a lot to chew through for the beans, but they've done it a few times over, right? Like this is been the supportive area on this chart around $10. Hasn't really been able to get above 11, but like we've tried that range once, twice, 3 times, 4 times, and now probably a fifth time where, okay, this could be. To also talk about the inverted head and shoulders with the neckline at $11 for a second. That would lead to a rally to $12 to $12.50. But that'll be a story for another day. And like a technical development, we'll have to kind of watch here over, play out over a long time. But walks like a duck, quacks like a duck, right? You think you all see what I'm getting at here? Left shoulder formed here into the $10 mark to begin with. Perfect, with the head down here at contract lows. So yeah, I got neckline up at like $10. We get up or $11. We get up there and break through it. Beautiful. It'd be a nice, reversal. This is I'm not saying that this is completely like this is it and we won't go down and break these lows and head lower. But like this is a good 2 days start and run up. Like we've kind of had situations in the past where we thought maybe things were getting going too. But we're going to see, we're going to get that test of the major moving averages. We're going to get those tests of prior highs. And if things continue on and continue to build into that narrative, we've got, I think, a technical reason that we could be forming a bottom here on the charts for the beans. And we're going to watch that closely. That $10 figure has held up well. And I think it will continue to into the future. May bean meal made a new low, little capitulation there. Couldn't stay down, basically closed with a doji on the day. Still was down 0.7, but that was a big win from being down like 293.80 into the close. We've seen a rapid move back in canola oil. Canola got, basically it was like down and limit down there, at the start of the month. Kind of a V-shaped recovery. We're about to go back into that 614, 615 area that closes the gap for that canola chart. That's kind of huge. May bean oil also just right back up in the range we've been in. I mean, this market has been so content between that $50, let's call it 48 handle, and that 40 handle down at the lows, and you just got a big old range playing out. 45.07 into the close, green close up 80, or we're looking up 80 cents here. In the bean oil into the close. I think this goes right back up to the highs. I'm more bullish above 48, bearish below 40, and I expect this range to continue to play out while we're in between. Because I'm not no rocket science there. Palm oil also very well bid here in the April contract. Just flip over to May. I don't trade palm oil, but I watch it, and actually looks like we could break out above 480. So oil seed complex and demand there really strong when you look at them all together. I think there's a reason we're snapping back in those oil seeds and the meal. I think if it capitulates and finds a low, you've got a perfect reason, a trifecta of reasons why, maybe soybeans there's some value there. And if you're thinking about doing reownership strategies, give us a call over here at Zaner. My number on screen there, 312-801-4231. Find us on Facebook, X. Shoot me an email. You guys should know how to get in touch with me by now if you need anything. The information's always free. So yeah, getting a little excited about the beans. We'll see. November beans only up 8.5 today, right? Leading the way there in new crop soybeans, back above the 100-day moving average already and testing that upper side end of the range. So Novi beans wanting to show us that maybe that 90 million acres, right, and guess from our acreage needs, maybe we need a reason to increase that to 92 to 94, right? Like let's put those bean acres back on. But if we're going to do that, I think you're going to need to see price higher, and this is definitely going to be something to continue to watch going forward. Which you look at new crop old crop spread here in the daily calendar spread. I mean, this thing was 40 cents over here start of February. That was the time where that inversion and everything would continue on, and things could be really, really bullish for demand reasons. And we've just not. We've unwound here in this future spread, 8.25 cents over right now. So, I mean, this thing could literally drop like $1.23 from where we are right now, tighten up that, narrow that spread up if it wants to. So, there's a question of should we be inverted in this environment for soybeans? And I don't know. The way this chart's holding, if we start to go much lower, we try to take out that even money on this chart. I mean, it's a slippery slope to start building carry in on a year where if you're not, if soybeans aren't going to get exciting here, like there's no reason they couldn't head down, full carry just to give folks an idea. Would be considered somewhere down around this dollar area. I mean, it's a long ways down. That's a lot of carry to build up into this chart if it starts to want to over the next several months. And that's what we're going to be paying close attention to is the fundamental game here of this July NOVE inversion and whether or not it's going to stick around for this crop year. And after the acreage number on Monday and after our quarterly grain stocks number, it's like a green light of whether or not we're going to break down it and basically trade to full carry, right? Trade and build carry here in a well-supplied, well-oiled machine, or are we going to stay inverted and go back up to 40 cents over? It's pretty much how I see this playing out. And we're right there on the cusp, right? So it's kind of cool, right? There's another market we can watch and look at here, knowing that it's going to hopefully reflect a more fundamental trend over the next several months that we can watch and look and use as a trading instrument and tool alongside our other outlooks for other markets, like just knowing May beans could turn a little bullish here is one thing, but are the spreads, are we seeing things in other places developing? Because if not, and they start to break down, and this does not become the head and shoulders pattern that I want to see play out, and we go down and find a new contract low, I'm going to be expecting that alongside July NOVE going back below even money and building carry into this market. Okay, so yeah, cautiously optimistic because we are kind of at the supportive area on the spread markets as well as outright beans. Maybe beans lead the way here. We know we need to buy some acres, I think, from what our acreage data is saying, and I've built you the case of why I believe that is the case. All right, everybody. Well, that wraps up our strategy of the day or week webinar here. Drop us a like. Leave us a comment. Follow us on Facebook, Zaner, the Zaner group, or here on Twitter. You can find me at Daniel Hussey Jr. Find me Dan SOT on Facebook. Give us a call, 312-801-4231, or leave me an email there at dhussey@zaner.com. Thanks for joining us this week, and we will be back with you next week and as price action develops. Take care, everyone.